another series of Insemilier. So today we have with us Country Manager and CEO India for Lloyd's India, Mr. Shankar Garigiparthy. So welcome to Insemilier, Shankar. And it's our real pleasure to welcome you in this series. So before I start asking the question, let me formally introduce Shankar, because for insurance industry, he's a well-known face and a personality. But he is somebody who has done his graduation in India and later moved to London for his post-graduation, and not just post-graduation, he has acquired quite a few qualifications from various international schools, right from London School of Economics and other colleges. And after that, he worked with Lloyd's of London for more than 2 decades in various geography, in various supervisory and regulatory roles before coming back to India as a country head. And I would say that it's a pleasure that you are back in India with us, Shankar. So the first question I will like to ask on behalf of viewers, because everybody has heard about Lloyd's of London, but can you briefly introduce the viewer to what is Lloyd's of London?
Sure. Archana, firstly, a huge thank you to you and also to the Insurance Institute of India for giving me the privilege of speaking to you and for allowing me the time. So in answer to your question, yeah, Lloyd's of London essentially is a marketplace. It's not a company. It is not owned by anybody. There is no shareholders for Lloyd's. It's a marketplace. It has been enacted by a separate act of parliament in the United Kingdom. And around the world, it is generally within the various insurance acts to basically allow Lloyd's to set up. So when I say a marketplace, what essentially happens is behind me, what you have is the typical underwriting room of Lloyd's. So what happens is we are licensed in around 75 countries around the world. And Lloyd's accesses business, insurance and reinsurance business from around 200 countries around the world. So what will typically happen is a risk from a certain geography will be brought into the underwriting room at Lloyd's through a insurance intermediary, which we call a broker. And they will bring that business into the underwriting room, which is where we have the various Lloyd's underwriters who are sitting there across the 4 floors. So there are thousands of underwriters who specialize in everything from motor to, you know, the most extreme of risks. And they will place that business with those underwriters who will then essentially evaluate the risk and give a quote on whether that risk is acceptable to them or not and what the price will be. So when the risk is acceptable to them, the broker will then go back to the client, issue a cover note to say that, OK, this is the price that you need to pay to the underwriter. And a premium is paid to the underwriter and the policy is then issued from the broker. In the case of reinsurance, a reinsurance contract is issued back to the broker, who then issues it back to the insurance companies who we reinsure.
So it brings me to next question. Being thought leader all the time, Lloyd's has come out with City Risk Index. And will you like to elaborate on this City Risk Index initiative?
Sure. So the City Risk Index was first brought out by Lloyd's way back in 2015, I would say. So essentially what this is looking at is, as most people will know, when a natural catastrophe or any kind of either a man-made or a natural threat occurs, there is invariably a huge burden on the various governments around the world in terms of meeting certain obligations on behalf of their policyholders or the public, general public. So what we have considered in 2015 is there were 303 cities at that time, which accounted for roughly about $35 trillion of GDP that they were accountable for. And what we assumed is, OK, if we split the various threats into man-made and natural threats, and if one of these threats were to occur, what would be the impact of this threat on the city's GDP? So the aim of this exercise is essentially to try and bring out or highlight to the governments, the policymakers, the businesses, and the various communities that when you're managing a risk, this is what you need to be aware of. So way back in 2015, when we did the first set of exercises, we just assumed at the time the research was done, and basically we had assumed that these are the top 10 risks that would impact any one city around the world. And if you look at the top 10 worst exposed cities, 5 of them are in Asia. So we did this exercise again in 2018. And I remember at the time when I presented this risk to the various policymakers in India and also to various parts in the region, a lot of them said I was doing a scaremongering exercise. And I said, why do you say that? And they said, Shankar, what are you talking about, human pandemic? You know, there is no human pandemic. What are we talking about here? So I said, it's not about a threat or a scaremongering here. What I'm essentially saying is the research is suggesting that if a pandemic were to occur, this would be the impact on that particular city in terms of its GDP. And I think the current set of events will essentially set out in terms of saying, OK, this is what has happened in the last 18 months to 2 years, and the way the world has suffered over the last 18 months to 2 years due to a pandemic.
So I still remember when pandemic was discussed in 2015, and many industry also had the same attitude towards pandemic as a risk. This brings me to next question, that what is your outlook in this new normal for RI market as a whole? In which direction we are going, and what are the new challenges which are emerging?
Sure. So I think one thing that has become very, very clear at the moment, Archana, is that the industry needs to now evolve. You have been talking about evolution, and you've been talking about modernization and everything else over the last how many ever decades. And you've had a very slow pace of evolution and modernization. Now, I think we've been given a very accelerated path towards modernization and evolution. And when I say evolution, what I'm talking about here is that it is high time that the industry has cognizance of what is it that the public or the policyholder wants, and what is it that you can do in terms of your own innovative ability to provide a product that meets their requirements. So you're not simply taking a standard, I don't know, motor insurance policy and giving it to a public who is probably using that car only at weekends, or he or she may only be using it during school holidays, as an example. So what is the point of having them purchase an insurance cover when they need to only use that car during a certain period of time? So is there a way that the insurance companies can now adopt a policy which actually allows the user to accept the policy or enforce the policy when they're taking the car out on the road? That's one. The other side of the equation is, if you look at health insurance as an example, and I'm just looking at it purely saying there were days when we were younger and we had life insurance and term insurance and all that. And today, all of that is, people are living longer. The days of somebody, passing away at the age of 70 or 75, etc., is now people are living beyond 90, 100 even, for that matter. Once upon a time, 100 was considered to be a major this thing. Now everybody is kind of comfortably going towards the 100. So what is it that you need to take into account? How does the health insurance policy need to evolve to take into account that kind of a lifespan? Today, I understand that we can't get a health insurance policy for somebody who's over 80 years old. Why not? Because that person may be still fit and healthy within obvious parameters. So we need to evolve in that direction. And I think the other side of the equation is also modernization. Keeping your products simple and easy to purchase, easy to deliver, and your claims process has got to be efficient in such a way that the moment the claim occurs, within 24 to 48 hours, the person gets the claim back. That's when you start showing the value of insurance to any customer. And I think that's something that we as an industry collectively need to work towards. And if we don't, we are doomed for failure.
My next question is slightly personal, because I know you are a avid golfer and also a motorbike enthusiast. So one game where one need a lot of patience and other where the speed. So how you marry your twin passion with insurance?
So actually, I will probably say that even my motorcycling passion is not about speed. I love cruising at for long distances. It's more an endurance. So I think in that scenario, if you look at it, my motorcycling passion and my golfing passion are kind of both for the long haul. They're not something that I can just go for short, quick bursts. I tend to generally go for the long haul. So a game of golf usually lasts about 5 to 5.5 hours. And it requires a certain degree of endurance to play and mental focus to be able to keep that level of concentration throughout the five hours. Similarly, with my motorcycling, I do go for long rides. I go for long drives in my car as well. I drive from Mumbai to Chennai single-handedly over 21-hour, 25-hour periods. So it's something that I enjoy. I do enjoy going. Speed is not the essence. It's more about enjoying the ride along the way. Similarly, in the game of golf, I just like to enjoy the game and the atmosphere that's there. I'm competitive with myself, not necessarily saying I'm competitive with everybody else, but I compete with myself. And when you take that into insurance and my career for that matter, I think I've always enjoyed going into, I take risks. You've seen my career throughout, whether it's in the UK or in the Middle East or in Singapore or now in India, I do take risks. Calculated risks, and I didn't go and start delivering. I like to deliver against what I've set out to do. And when I've reached that objective, then I say, okay, what's next in terms of challenge? So that's where it's always been. So I would probably say, yeah, there is some parallel in terms of how I go for the endurance. At the same time, I like to deliver something at the end of it. Element of satisfaction, which is what I get from my career as well.
The last question I have is any special message or tip you have for a training and examining body like Insurance Institute of India?
Oh, wow. This is basically what I would probably say is I think it is time that our curriculum and in terms of how we examine anybody for that matter is something that is fit for purpose. It's not about, there is always this very simple perception that people have about Indians in general, is that we are very good at academics purely because we kind of by heart this syllabus and we regurgitate it into the exam, right? So what I would probably say is, okay, what sort of practical knowledge and how do we examine the practical aspects of it? So I think this is where I would probably say, is there a way that III can kind of evaluate the practicalness of somebody's ability to be an underwriter or a claims adjuster or a claims professional, loss adjuster, surveyor, etc. And that's probably where I would probably encourage III to do.
Thank you so much, Shankar, for being with us today and sharing a bit about reinsurance market. So again, I would like to thank you on behalf of Insurance Institute of India for today's interaction.
Thank you, Archana. Thank you for the opportunity, and thank you to the Insurance Institute again for this opportunity. Thank you.